Good afternoon, everyone. Trader Tim, E-mini here, and I wanted to kind of recap this week and specifically talk about yesterday versus today. We kind of started the days very similarly, and we hung around the first 30-minute range for about the same amount of time, hour or so. But they've kind of turned into two different days. You can see on my daily chart here on the ES. Yesterday, sort of a spinning top, and today, markets haven't closed yet, but so far we've got a decent trend day, big body candle, plus the gap up. So I want to talk about those two scenarios as well as the two trades that I took today. So let's start with yesterday. And these two lines that I have drawn are just the high and the low from the first 30-minute range. I find that very helpful for me to kind of one, get an idea of how big is that range. So like yesterday, we go from 29.11s up to 29.17s. So we're talking 6 points. So not a huge range. And typically, if that first 30-minute range is fairly small, 3, 4, 5 points, it's pretty easy for us to get outside of it, get away from it. And if we're going to be a trend day, by the end of the day, that opening 3 or 4 point candle is probably going to look really small in the grand scheme of things. Well, yesterday, not a huge opening candles range, but we stayed within it. You can see all the way about 2.5 hours and even beyond that. We stayed in the first 30-minute range all day long. So really, with the exception of breaking down by a point or so and breaking above it by a point or so, there really was no movement outside of the first 30-minute range. And if I pull up the 30-minute chart, you can see these topping tails, and that's a sign that the bears are at least people are interested in fading the market, or there's not enough bulls to continue pushing the market higher. So that's yesterday, very range bound in that first 30-minute range. And if we just kind of look at how the market traded, if we were to draw from lows to highs, a retracement, we have a failure of the 61.8, then draw in the opposite direction, boom, two failures back to back. That's a sign, another sign that things are likely to be kind of nasty. If we just keep drawing these high to low, fail the 61.8, low to high, fail the 61.8. So just a big whole mess of nothing. But then if we come over to today, and I've got the same first 30-minute range drawn here, marked with the high and low. And first, hour or so of the day, you can see, okay, yeah, we're trading within the first 30-minute range. Oh, we dipped above the first 30-minute range a little bit, but then we came back into it, just like yesterday. The difference being, within this range, we start to see some decent trading occurring after about 20 minutes. I can come from highs and I can start drawing retracement shorts, and I can see them trade to the target. Even if I use that same anchor point to new low, trades down to the target, same thing, trades down to the target. And then when we get down here, we break these little swing highs. We can draw from low to high, trades at the 50, moves up to the target. So we're still within the first 30-minute range, but the activity that I'm seeing is a lot cleaner. Then we start to go, we trade from the bottom of the range to the top of the range, come back, trade at the 50, and then break out, make a new high on the day. So it was at this point today, I took a little long, up here at highs, anticipating that we'd pull back and then break out again. We were at the top of the first 30-minute range, and that one stopped me out. And I was a little bit surprised to see that after gapping up so high today. And so now we're back in the first 30-minute range. And so that's kind of my sign to say, well, I'm going to be very, very cautious inside the first 30-minute range. So up until this point where we broke out and I took this long trade and felt like we had a potential for some rallying, it was pretty much looking a lot like yesterday. So I didn't want to be taking trades in here, but the difference between yesterday and today was how we showed signs. We had these 50 smaller 50% retracements working within the first hour or so. Whereas yesterday, if I come over here and I draw up a short, we traded at it, but we didn't break lows. We failed it. If I were to turn that around, low to high, nothing there, little bounce really, but then we failed it. So seeing the retracements working within the first 30-minute range was my first sign that, okay, maybe if we can break highs, we'll get some momentum. So I took the stab at the long there, nothing there, just a small 2-contract trade. I was actually doing a trading webinar with Infinity at the time. And then later in the morning, we got this consolidation. And anytime I see a triangle consolidation form like this, I'm thinking, okay, the resumption of the triangle is likely going to be in the trend that we were prior. So leading up to this triangle, this wedge, we were moving up. Therefore, after we consolidated and got real tight at the apex, I was looking for us to break up. And that's what we got. So on the first break of highs, which I will mark over here, this high of the triangle, on the first break, we only went in a couple ticks. And I drew up the retracement. I didn't really have a ton of confidence in this because so far this week we hadn't gotten much follow through. But we pulled back to the 50% and then traded to the negative 23% target. So I said, okay, well, now we're clearly into new highs. And if I draw up the next retracement, it lines up with those prior highs and these prior highs here. So I took the long, 29.30, it ended up being a 33.25, and it ended up being a little bit slow, but we were able to get a little bit of traction, and just by trailing my stop underneath the swing lows once we broke above this high here, I just trailed my stop. We had actually what was a quadruple top, but just keeping my stop underneath lows, kept me in the trade, and then eventually I was taken out on this bigger dip down. So the moral of the story here is just because we're trading inside of the first 30-minute range doesn't mean that you should kind of disregard or not pay attention. I'm still looking for setups, how we're trading at those setups. I just want to make sure that I'm not trading in the middle of that range, because you see if I shorted in the middle here, we traded right through it. If I in today's case, the first long here in the middle did get some legs, but I don't like to trade blind limit in the middle of a range. And you can see, over here, that what was the trading hours only low to high, it had nothing there. It traded through the 61.8. So be cautious in the middle of the range. Use that first 30-minute high and low as a reference point. And then when we start breaking out, look for, did we just break out by a couple of ticks, or did we break by a couple of points? And if we can break highs by multiple points, then the following pullback is likely to have more follow through. If we just break out by a couple of ticks and then sell off, well, the pullback is likely to not have quite as much of a follow through. So that's kind of how I traded yesterday or today, based off of what I saw this week. Now it is futures rollover week, so I was trading very, very lightly. It was a really tough week. I didn't see a whole lot of setups. I really only had maybe two trades each of the days, maybe 3 on Tuesday. So not a whole lot of trading going on, but to get through this week, unharmed, maybe just slightly profitable is great. Consider that a success. So next week, FOMC meeting announcement Wednesday. I think people are waiting for that announcement to come out. So Thursday, Friday, we should start to see the resumption of good trading, and that should carry us all the way into the Christmas holiday. So if you have questions, as always, Tim at eminimind.com. You can reach me. Live trading session is over at eminimind.com/VIP. I hope everyone has a great weekend, and we'll talk to you again next week.